Hello everyone, Kathy here. Let's take a look at how my ZIP trading strategy works. How can we make pips with ZIP? The first thing to understand is that ZIP is a short-term momentum indicator. It's a members-only visual tool that we developed here at BK Forex to help us identify trades easily and deliver consistent profits to our members. It's short-term because it uses 1-hour charts. There are two components, the background color and the indicator line. The whole idea behind ZIP is that you sell when the background is red and the currency crosses below the indicator line. And you look to buy when the background is green and the currency crosses above the indicator line. Now, ZIP is smart enough that when that happens, it turns the candle white with either a red outline or a green outline. So visually, you can immediately see whether or not there's a sell signal or a buy signal. The background itself incorporates the overall trend. So even though we are trading on 1-hour charts, we're only trading in the direction of the longer term trend, and that is denoted by the background color. So that's why we only sell when the currency pair crosses below the indicator line and the background's red. And we only buy when it crosses above the indicator line when the background is green. So buy when the long and short-term trend shifts positive. This is what ZIP helps us to do visually. So this is an example of Eurodollar crossing above the indicator line. The background is green, setting itself up for a buy trade. Here's an example of a sell trade where the background color is red, dollar Swiss drops below the indicator line, triggering a sell signal, which becomes a very nice downtrend trade. Now, when it comes to trading ZIP, timing is very important. It's important to know when to trade ZIP, when not to trade ZIP. I trade ZIP 2 times a day, in the New York session as well as the Asia session. To be more specific, I trade the New York Open and the Asia Open. So 5 to 9 a.m., that's when the ZIP signals are the most ripe and they're have the highest accuracy. And also between 8 p.m. to 11 p.m., these are in New York times, they tend to be very, very accurate. Those are the best times to trade ZIP. The worst times to trade ZIP is between 9 a.m. to 1 p.m. and 5 p.m. to 7 p.m. New York time. I've listed the GMT times for you, but GMT shifts based upon the time of year, so you have to make that adjustment. Why is this important? Why does it work? The reason why is because we have to really kind of embrace the philosophy of the strategy. The strategy is a short-term momentum strategy. So it works at the New York Open because it rides off the momentum of the European trading session. It works in the Asia Open because it rides off the momentum of the New York trading session. The problem with 9 a.m. to 1 p.m. block is that you start to get into the U.S. stock market open, at which point there's a lot of other things going on that can throw off the trade. And then you go in towards the London close, at which point there are also other things that could affect the trade. 5 to 7 p.m. is the dead zone in the FX markets, and that's the reason why we don't trade during that time. Aside from the technical setup and the timing, there's one more important component. There's actually 2 important components. One being the fundamental analysis in the macro view. Just because we have the technical setup does not mean we take the trade. We only take the trade if the timing is right and if fundamentals support our views. Another thing that BK members get, BK members only fundamental heat map. This heat map is updated at least once a week, where I basically share my fundamental view for the currency pair for the week ahead. And usually this doesn't change very much because fundamentals, the big important fundamentals, don't change day to day or week to week. It really changes every few weeks. But still, each of these cards can be expanded when you click on them for more detail. They can be sorted by currency pair. And we basically only take trades that are consistent with our fundamental views. And we only take trades that have market dynamics on their side, where the stock market performance, the bond market performance, and relative strength are taken into consideration. These are the things that we look at every single day before we call out a zip trade for our members. Where do I get this information? Well, a lot of the movements in the stock market, bond market can be found just on TradingView, and I'll teach you how to set up your watch list so you can watch those the same way that I do. So this is a classic zip trade where we have dollar yen crossing below the indicator line. At that point, we check our fundamentals. We see that I'm bearish dollars, I'm bullish yen that week, and I give an explanation about why that is the case. And then we check the markets. At that time, the stock market was selling off quite aggressively, and that gave us the 3 check marks for taking the dollar Swiss short trade. And as you can see, it became a 300-point sell-off in dollar yen in this case. Now, I'll be the first to admit we didn't take the whole profit, but all the stars lined up for a very beautiful day as well as swing trade. Here's another example of the zip trade where dollar Swiss dropped below the indicator line, became a very nice trade. Kiwi dollar, 2 setups here where a zip buy signal was triggered, one on the first arrow, the second one the second arrow, both of which became very nice trades. There are other variations of zip as well. The classic rule is buy when the candle turns white, sell when the candle turns red. But the first variation is we trade the retrace to the zip indicator line. That can also be very powerful when the zip indicator line actually holds as resistance like it did here in Aussie Swiss. And also here in CAD Swiss, where the retrace to the indicator line was also a very nice sell entry for dollar CAD on multiple occasions, 1, 2, 3 in the dollar CAD chart. The next variation is when zip crosses the line with a Q change 1 candle before. So we get the drop below the indicator line 1 candle before the background color changes. So the price action was a little quicker on the short-term basis than the long-term basis to adapt. And that's okay. It can be just as a powerful signal as you saw here in dollar yen and as you see here in the Aussie dollar. The third variation is one of the variations I love, which is where we get double or triple zip, where we get multiple buy signals. That's when we can have a very powerful buy trade. You see it on the right-hand side of the chart as well as the left-hand side of the chart. Here's another example, double zip sell signal. Very powerful sell signal here because it tried once, it rebounded, and then the second time was when it finally broke down. So that's another example of the zip strategy and different variations that we can use. So in a nutshell, how does the zip trader work? It's a short-term momentum indicator, uses 1-hour charts. It incorporates the broader trends, and on its most basic level, you buy when the long and short-term trend shifts positive, and you sell when the long and short-term trend shifts negative. Timing is very important, and also we filter the trades and only take the signals that are supported by fundamentals and daily market dynamics. Every single day, we deliver these trades to you through our Slack platform. And as you can see here, this was an Aussie CAD trade I put up, and this had triple zip sell in Aussie CAD. Provide you with very clear-cut reasons for taking this trade. And we flowed this trade for 48 hours, at which point we hit our 40 pip profit target. If you have any questions about this, you can always email me at Kathy@bkforex.com. We look forward to having you on board, and I look forward to sharing with you the zip indicator.